Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, let me introduce myself. My name is Muthia Safira Lisandi. My student ID is 234111028. In this video, I will briefly explain about ethics and behavior in accounting. This slide explains the understanding of ethics and behavior in accounting. Ethics and behavior in accounting discuss how moral values, ethical principles, and human behavior influence accounting practices. This means that an accountant is not only required to be able to record and prepare financial statements, but also must have integrity and responsibility in every decision made. This is important because in practice, accounting often involves various interests, so ethics are needed to ensure that the information produced remains honest, objective, and trustworthy. This slide explains the importance of ethics in accounting. First, maintaining integrity and trust. Asterisk. Ethics is important to ensure that financial statements are prepared honestly, so that they can be trusted by both internal and external parties. Second, preventing fraud and manipulation. Asterisk. With ethics, accountants are expected not to engage in actions such as manipulating data or hiding actual information. Third, supporting objective decision-making. Asterisk. Ethical and honest information will help management make more accurate and unbiased decisions. Fourth, enhancing the credibility of the accounting profession. Asterisk. Good ethics will make the accounting profession increasingly trusted by society and the business world. This slide explains the principles of ethics in accounting. First, integrity. Asterisk. Integrity means an accountant must be honest, consistent, and not engage in manipulation in the process of recording or reporting financial information. Integrity is the main foundation because without honesty, accounting information cannot be trusted. Second, objectivity. Asterisk. Objectivity means an accountant must make decisions based on existing facts and data, not based on personal interests or pressure from other parties. This is important so that financial statements remain neutral and unbiased. Third, confidentiality. Asterisk. Accountants are required to protect sensitive company information, so that it is not misused or disclosed to unauthorized parties. This is important to maintain the company's trust. Fourth, professional competence. Asterisk. Accountants must have knowledge and skills in accordance with professional standards, and continuously develop themselves in order to carry out their duties properly and correctly. Fifth, professional behavior. Asterisk. Professional behavior means that accountants must comply with applicable rules, standards, and codes of ethics, and avoid actions that could damage the reputation of the accounting profession. This slide explains the relationship between ethics and behavior in accounting. First, ethics influences the behavior of accountants. Asterisk. Ethics serves as a guideline for accountants in making decisions. If someone has good ethics, the decisions they make tend to be more honest and responsible. Second, individual behavior determines the quality of information. Asterisk. The way accountants act in the process of recording and reporting greatly affects the quality of the accounting information produced. The better their behavior, the higher the quality of the financial statements. Third, ethical misconduct can lead to unethical actions. Asterisk. If ethics are not properly implemented, actions such as data manipulation, fraud, or misuse of financial information may arise. Fourth, accounting systems can shape behavior. Asterisk. The accounting systems used within an organization can also influence how individuals act, for example through incentive systems, supervision, and work rules. This slide explains the ethical theories used in accounting. First, utilitarianism. Asterisk. This theory states that an action is considered right if it provides the greatest benefit to the most people. In accounting, decisions made should consider their impact on various parties, not just one party. Second, deontology. Asterisk. Deontology emphasizes that actions must comply with applicable rules, duties, and codes of ethics. Therefore, the rightness or wrongness of an action is not only seen from its outcome but also from the process. Third, egoism. Asterisk. Egoism is a perspective that evaluates actions based on self-interest. In the context of accounting, this can have a negative impact if not controlled because it can trigger unethical actions. Fourth, virtue ethics. Asterisk. This theory emphasizes the moral character of an individual. It means that an accountant must have qualities such as honesty, responsibility, and integrity in every action they take. This slide explains the ethical dilemmas in accounting. First, the conflict between personal and professional interests. Asterisk. This occurs when an accountant is faced with a choice between personal interests or fulfilling their professional responsibilities. This situation can make it difficult for someone to make objective decisions. Second, pressure from supervisors or the organization. Asterisk. In practice, accountants often experience pressure from management to follow certain directives, even if those directives are not in accordance with ethical principles. Third, financial report manipulation. Asterisk. This occurs when financial data is altered or adjusted to appear better than the actual condition, which of course violates the principle of honesty. Fourth, unclear ethical standards. Asterisk. In some situations, there are no truly specific rules, so accountants must use personal ethical judgment to determine the right decisions. This slide explains the role of ethics in the accounting profession. First, maintaining public trust. Asterisk. Ethics is very important to build and maintain the trust of the public, investors, and other parties in the accounting profession. Without ethics, the accounting profession could lose its credibility. Second, avoiding fraud. Asterisk. Ethics helps accountants to avoid actions that cause harm, such as data manipulation or financial statements that do not reflect the facts. Supporting proper decision-making. Asterisk. With ethics, the information presented becomes more honest and accurate, thus helping management make correct decisions. Fourth, enhancing professionalism. Asterisk. Ethics ensures that accountants work according to applicable standards and codes of ethics, so the quality of work becomes better and more professional. This slide explains the factors that influence ethical behavior in accounting. First, individual factors. Asterisk. Ethical behavior is greatly influenced by each individual's moral values, attitudes, and personality. A person with good ethical values tends to act more honestly and responsibly. Second, organizational factors. Asterisk. Work culture, rules, and the systems implemented within an organization also affect employee behavior. An environment that upholds ethics will encourage individuals to act ethically. Third, environmental factors. Asterisk. Pressure from the external environment, such as coworkers, superiors, or business conditions, can influence someone in making decisions, including decisions related to ethics. Fourth, the system of rewards and sanctions. Asterisk. The presence of rewards and punishments in an organization can shape employee behavior. A good system will encourage ethical behavior and reduce unethical actions. This slide explains the impact of unethical behavior in accounting. First, the decline in public trust. Asterisk. If accounting is conducted unethically, financial statements will be doubted, resulting in decreased trust from investors, the public, and other parties. Second, financial loss. Asterisk. Unethical behavior such as fraud or manipulation can cause significant losses for the company, even threatening its business continuity. Third, legal sanctions. Asterisk. Ethical violations in accounting can lead to legal sanctions, including fines or other penalties in accordance with applicable regulations. Fourth, damage to the company's reputation. Asterisk. Once a company is involved in an unethical case, its reputation will be difficult to restore and may have long-term impacts. This slide is a conclusion of the material that has been discussed. It can be concluded that ethics and behavior in accounting are very important in maintaining the quality and trustworthiness of financial information. An accountant's behavior is influenced not only by technical skills but also by moral values, the work environment, and existing pressures. Therefore, the application of good ethics is very necessary so that the financial statements produced remain honest, objective, and can be used as a basis for making appropriate decisions. Okay, that is all for my explanation regarding ethics and behavior in accounting. I conclude, Wassalamu alaikum warahmatullahi wabarakatuh.